Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, let's do an update on the Chinese stocks situation, so the crackdown that it's happening in China and obviously Alibaba stock, JD.com, Baidu, Tencent, whatever you name it, it is crashing. The thing is that how much of that crash is justified with the crackdown and how much of that is fear. Okay, because that, in my opinion, is the biggest question over here. So in today's video, guys, we are gonna talk about that. What am I doing with Alibaba stock and JD.com? Also, I'm gonna tell you what is my personal biggest concern at this moment, okay, which is not related to Chinese stocks, believe it or not, but I will tell you in just a minute. Before we start, the only thing I ask you as always is please leave me an early like. It's very important and I thank you for it, and subscribe to the channel so you don't miss any new updates. Let's begin. Alright guys, so let's start with what is my biggest concern at the moment. And the answer is that this fear, because in my opinion it is fear, it is panic sell, it is a chain reaction, will shift through the US market as well. Because China is not a small country, and what happens there, the fear, the uncertainties there, can easily at this point shift to the US markets, okay? And because I have just 10%, 9% invested in China, and the rest is basically in US stocks, obviously if we deduct cash, well, that's something that worries me, okay? Because when the market goes through fear, there is no more logic. People sell, they just sell. They see red, they sell. And investment funds, they do the same because investors are calling them saying, well, what the fuck is happening? They don't know what to do and they start to sell. Chain reaction, fear, panic selling. And this can shift to other markets as well, okay? So today, for example, we are seeing some red as well. In the US market, the Nasdaq is down 1.7%. S&P -1, and all the stocks are down. Tesla, they had amazing earnings, -4% today. That's the thing. Google is down 2.5%. So that's just what really worries me, okay? Not Chinese stocks, because believe it or not, at these prices, I'm way more confident about Alibaba stock, for example, than older US stocks, which are priced way more higher in terms of multiples. And if fear comes in and hit drastically, well, the downside potential, in my opinion, can be higher at this particular point. So that's my biggest concern. Obviously, I will keep an eye on the US market. But let's talk about China. So why I think that it is panic, like 80% of what we are seeing, it is panic. The first thing that I would like to disclose is that, first of all, regulations and regulatory issues and new rules and crackdown, they do not happen only in China. It's just an example of what happens basically in every country. The US obviously has the longest and most successful history of companies in the stock market. But if we take a look at what happens in the past, just literally until 1 month ago with Facebook, we realize that crackdown and regulatory issues and uncertainties are not something related just to China. What makes China more drastic and dramatic is that, obviously, as I told many times in the channel, it is an emerging market and uncertainties are higher than in the US, which has been already tested many times. Then, obviously, the lack of transparency, that's the biggest thing, together with the fact that China is a dictatorship state, okay? So that's the thing. You put all of that together, and even just a simple rule, a simple regulatory proposal becomes something drastic that moves the stock market with a leverage of 15x compared to the actual impact of that particular policy. Obviously, right now, the market is in full panic mode because they are saying, well, what's next? Okay, it reminds me of 2008 when the first bank collapsed. basically all the banks were shit. Okay, that's it. And that's exactly what happened with the Chinese stocks. They targeted very heavily the education stocks after Alibaba, obviously. And right now they are saying, well, who's next? Okay, who is next? And the market is pricing those companies like they do not have a future. But especially for big companies like Alibaba, Tencent, okay? An example of that is Meiyutan, amazing business. And the government came out with a simple rule, something that has happened many times in other states, like you have to guarantee to the driver the minimum amount in terms of salary. You cannot exploit them as slaves. And if you remember that, well, Uber and Lyft went through the same exact stuff basically 5 months ago. But when it comes to China, all of that has a different impact on stocks. Okay, so something like that. If it happens in the US, yeah, maybe the stock moves down minus 5%. Well, in China, minus 40, 50%. So that's why I'm telling you that maybe not all of it is justified. Okay, a lot of it, in my opinion, is complete panic. So what am I doing actually with my positions in Alibaba Stock and JD.com? Can this create an opportunity for the long term? Well, in my opinion, yes, it can create an opportunity because first of all, now obviously US and China, they have two completely different philosophies on how to drive a country. Okay, obviously I don't need to explain that. And obviously, I do not judge anyone. The only thing I'm looking at is in terms of investment opportunity, and that's it. It's not my job to judge who is right, who is wrong. I literally don't give a damn. But when it comes to China, actually, the first thing that I can say, at least in terms of an investment point of view, is that when it comes to crackdowns and regulations, so far, if I take a look at the policies, so they started with Ant Group, for example, their decisions have not been crazy, in my opinion. For example, I have the feeling that China looks at the United States and says what went wrong there over the history, so that we can learn from their mistakes and try to avoid them from happening in our country. Ant Group, so canceling the IPO, has been something that, in my opinion, they looked at the financial crisis in 2008 and they looked at how Ant Group was lending money to people, to consumers, and the leverage involved and the dimensions of that company, that it was becoming too big and with a potential chain effect, okay, risk over the financial system. So the decision to actually stop that and rule it out, change the rules, in my opinion, has not been something too crazy, okay, something out of this world. It's been something that they did it because they had reasons. But then also when it comes to, for example, education stocks. Now, the idea of pushing education as a non-profit is not, once again, something too crazy, in my opinion. For example, if you take a look at the United States, one of the biggest problems today is actually education. So you have all those students that they have to take massive loans in order to just have a degree. And if you cannot afford to do that, you cannot reach certain jobs, certain levels, just because you cannot afford to pay for an education. So that is a massive problem in the United States. It's not the first time that we hear about that. So yeah, it can be tough, obviously, if you owned those stocks. But in terms of a decision, it's not that crazy, okay? There are different philosophies, but anyway. And then also on the tech companies. So China doesn't like that just 2 or 3 companies become too big and too powerful, forming basically a monopoly or something like that. Some rules on Tencent, some rules on Alibaba, some rules on other companies. But those things actually, they have happened with Google, they have happened with Facebook, they have happened with Apple, okay? Lots of stuff, they have already happened in the United States. So the effect is different because of lack of transparency and the fact that the government obviously is a dictatorship state, okay, China. So the effect is different. But when it comes to Alibaba stock and JD.com, why? First of all, why I own only those two companies? Well, that's because they are in the retail business. So if you follow the channel, you know that what I want to bet on is the fact that China will become a massive economy in the next decade, and that the middle class will grow substantially, exponentially, and the expenses will increase consequently. Okay. So that's my bet. And Alibaba Group and JD.com are like buying Amazon and eBay of China. So that's my bet. First of all, Alibaba already went through a probe. They have already been fined. So why am I okay with it? Because the rules that they gave do not impact the business that much as the price of today is pricing. Okay, this is just ridiculous. As well for JD. And obviously, if you want to consider stocks like, because the problem right now is with data. Okay, data will be a huge problem in the future. So sensible data information. So, for example, with Didi, what travels people are doing, all that kind of stuff. Something that can be dangerous, let's say, for the public interest. All those companies will go through some drastic rules. So all of that is something that I would stay away from. That's why I didn't buy Baidu, because the idea of Baidu is like Google, is similar to Google, and a company like Google cannot exist in China. But Alibaba and JD are actually a retail business, okay, online commerce. And in my opinion, Alibaba especially already went through the hell, and they came out. If they just follow the rules, it should not be a problem. And so Alibaba at 180 today, this is 179, it gives us this model, is pricing at 2% growth until 2025 and a 1% growth until 2028. So basically, the price of today is saying that Alibaba doesn't have a future. What Alibaba is building, nothing. Alibaba will stop to grow, basically, will not do anything over the next decade. And this is exactly what I do think that it is wrong and it is exaggerated. Same stuff, for example, with JD. If we just take a look at over there, what JD is pricing today, $61.50 per share, is pricing a 7% growth until 2024 and a 5% growth until 2028. Considering that it grew 38% just in the last year. Well, is this creating an opportunity? In my opinion, yes, it is. And then, am I planning to buy more? Yes. In the short term, no one knows where it's gonna go. The only thing that can be useful is to take a look at the interesting area in the price. For example, that's, in my opinion, an interesting support over there, $170 per share. For Alibaba. Then when it comes to JD, in my opinion, this area over here, that's an interesting support area that basically the price is in at the moment, okay, which is from $58, $59 to $65. That's a range over there. As you can see here, the price remained stuck in it, basically the last summer. So am I buying more? Yes, I'm planning to buy more. When? Well, honestly, I'm just gonna wait and try to see where the stock is gonna stabilize a bit. Because as of now, with this panic selling, we do not know where it's going. However, for those two particular companies, I do think that this panic situation is creating an opportunity. Because I do think that those two companies in 5 years' time will be easily higher than this price right now. And as I told you, my biggest fear right now is not about those two Chinese holdings, but it's about the fact that this panic selling without a logic can extend to US stocks, okay? Because obviously when people see red, they start to doubt everything. They start to say, well, now what is going on? China is a big economy and it has a big impact on the world's economy. So, for example, with shortages and things like that, What is going to happen, we don't know. Okay, the biggest risk, in my opinion, is that the Chinese crackdown can have an impact on US stocks as well. So as of now, I will obviously keep an eye on Chinese stocks, so Alibaba and JD, in order to buy more, and then also keep an eye on US stocks as well. I hope this will not escalate in terms of US stocks. But anyway, let's keep an eye on that. So that's the end of the video, guys. Leave me down a comment with what do you think about that. How long will this situation last with Chinese stocks, and can this situation be dangerous for US stocks as well? And subscribe to the channel if you want, and as always, guys, have a wonderful day.